Well, guys, earnings madness continues, and today we had Amazon report earnings. By the way, I'm recording this video on Thursday night, but it'll probably get posted Friday morning. But anyway, Amazon happens to be my second largest stock, and I've decided to do something that I probably shouldn't be doing because it's already a very large position in my portfolio. I have a pretty good cost basis on it as well because I did most of my buying at under $1,000 a share, but they just reported earnings and the stock crumbled. It dropped by like around 9% at one point, and I've decided to start buying into the stock again because I looked at those earnings and actually liked a lot of the stuff that I saw. So in today's video, I want to let you know what's kind of going on, what's going on with the earnings, why I'm adding to my position, and just so you know, I'm adding using fractional shares because this is a stock that trades like north of $1,600 a share. It wasn't too long ago that it was trading at north of $2,000 a share. And if you guys know anything about me, you know that I'm a long-term investor. I like to buy stocks as they're going down. So usually when I buy a stock, it continues to drop even more. So I like to buy in small amounts over time. And there's just really no way I can do that with Amazon when every single share is trading like north of $1,600 a share. I'm not rich, contrary to what a lot of people say in the comment section. By the way, Amazon again is already my second largest stock, so I don't really want to be buying in such large chunks every single time. I'd rather buy it kind of slowly in smaller amounts. But anyway, that's what I want to talk to you guys about in today's video. I hope you guys enjoy this. Make sure you hit the like button if you do. And let's just go ahead and dive right into this and let's take a look at those earnings. And then I'll let you know a couple of reasons why I'm adding to my position, even though it's already so large. Okay, so Amazon basically came out and said that they're spending more to improve their delivery system, which is hurting profits, and they lowered guidance for the fourth quarter, signaling a weak holiday shopping season, which is obviously very important for a huge retailer like Amazon. But I will just quickly add that Amazon is notorious for doing this. They usually give very low guidance, especially for the holiday season, and then they usually come out and crush those estimates. But anyway, as a result, the stock plummeted by around 9% at one point, but we'll take a closer look at the stock price in just a second. Now, they did beat revenue by over $1 billion, but missed revenue on AWS, Amazon Web Services, which is their very important cloud segment, and that spooked investors into thinking that cloud may be slowing down too much given rising competition from Microsoft and Google, and we'll take a look at that also in just a second. But more importantly, they missed EPS by a decently significant amount, reporting $4.23 versus $4.62 expected, so a miss of almost 40 cents per share. Still, revenue was actually up by 24% in the quarter, which is very strong growth considering that it's $70 billion that we're talking about. This is a giant company that is still growing at extremely high rates for their size, and that's clearly a result of investments that they've been making in offering one-day delivery to more customers, which they've pointed to numerous times as being a huge success in leading to more purchases on the site. And while it's a big investment, it's ultimately the right thing to do for the long-term success of the company. However, those investments are coming at a high cost as they've now spent close to $1 billion over the past 2 quarters on expanding the program and are expecting to spend another $1.5 billion in the fourth quarter alone to increase their warehouse footprint and product selection in the program. As a result, operating income actually fell by 15% year over year, which is a pretty dramatic drop. And this is what is spooking investors the most because, as you guys know, revenue has always been climbing for Amazon, and that's never really been a problem. Here's a chart of their sales since 2006, and they've just steadily climbed every single year. However, net income is a completely different story that's always been very low for Amazon since they constantly reinvested their profits back into the business to drive very high revenue growth, and it was only recently that they started to generate huge profits, and a lot of that actually has to do with Amazon Web Services because it's so much higher margin. In fact, they were becoming so profitable out of the blue that since 2015, net income actually soared by almost 1,600% by last year. Well, now investors are worried that Amazon is returning to their old ways of reinvesting heavily again and how that can drag down their profits. In fact, net income actually dropped this quarter by as much as 26%, which is a pretty big deal. As a result, the stock plunged in after hours trading by around 9% at one point, although it finished the day being down by only a little less than 6%, but overall, this does leave them down over 7% for the week and around 18% down from their highs this year. I think this stock fell down to as low as the 1620 range at one point, and I just can't really help myself at these levels. I feel compelled to start adding to my position. And I know I shouldn't be doing this, but I just couldn't help myself. Guys, I can't be the only one who thinks that Amazon investing in their future at this point is the right thing to do. Now, I completely understand if you're like a short-term trader and you just want Amazon to be doing very well right now and you want to see those profits continue to roll in so the stock price climbs. And I completely understand that the PE ratio is very expensive and all that kind of stuff. But as a long-term investor, Amazon is just one of those stocks that I plan to hold until I retire, or unless something like really dramatically changes fundamentally with the business, and I'm just not seeing that happen at this time. I actually like the changes that they're making. The way I see it is that Amazon has reached the top in several different areas, and I don't want them to just be complacent and say, hey, we made it to the top, let's just chill now, we can just rest and let other people catch up to us. That's not what I want to see. I want them to continue to invest in the business so that they can remain on top. And this perfectly reminds me of something that Jeff Bezos said not too long ago when he was talking about the company, and he basically said, hey, you know, we can eventually go bankrupt, eventually someone is going to disrupt us and those kind of stuff. And a lot of the media kind of spun that and ran with it and said, oh, Jeff Bezos doesn't believe in the company or he thinks it's going to go bankrupt. And that's just the complete opposite of what he was trying to say. What he was saying was that they need to keep fighting. They need to keep investing in the company and making all the right strategic moves and keep innovating so that they don't become complacent and they don't allow any of their competitors to catch up and eventually dethrone them. And as a long-term investor, that's exactly the type of leadership that you want in a company that you're invested in. You want a management team that is still hungry and that is still trying to push the company and push the boundaries and get bigger and bigger in the future. So if Amazon wants to keep spending money and building out more and more warehouses and they want to take over the world, I say go for it. I don't see any problem with that. This is a company that I'm invested in. So I want them to be very successful in the future, and I want them to keep investing in their business for future growth. And I actually think that Amazon will be the first company to reach a $2 trillion market cap. I've said this many times before, and I'm sticking by it. And I'll give you a few different reasons why I'm so bullish on Amazon. Yes, Amazon Web Services is slowing down. It dropped from revenue growth of 42% in Q1 to growth of 37% in Q2 and is now down to 35% growth in Q3. But guys, this is still huge growth that we're talking about. Now, this may not be the case for you guys, but for me, Microsoft is actually my largest investment. So I'm not really worried about the fact that Azure is growing faster than AWS at over 80% growth last year, while Amazon grew at less than 50%. But even if I wasn't invested in Microsoft, there's no question that the cloud market is going to continue to get bigger and bigger in the future because practically everything is moving to the cloud these days, and artificial intelligence and the Internet of Things and all of those kind of buzz trend markets need cloud infrastructure to really work properly. And I believe that not only will a rising tide lift all boats, but I think there's plenty of space for multiple cloud providers in the market, and I think it will lead to healthy competition and innovation. Not to mention that Amazon is currently by far the leader with over 30% market share last year, while the next closest is Microsoft with about 17%, and then Google and the rest are much further down the list. And I don't think they're a real threat except for maybe Google, but even then, I still think that Amazon and Microsoft are likely to be the two leaders over the long term by a considerable amount. On top of that, it's not like AWS is the only high margin growth Amazon can tap into. They also have a growing digital advertising business that has actually been ramping up this year. Digital ad sales are included in their other segments, and they grew by 36% in the first quarter, which increased to 37% in the second quarter, and then increased again to 45% growth in the third quarter. And that's a direct result of driving more traffic to their online platform, which also increased growth from 12% in Q1 to 16% in Q2, and then 22% in Q3. And these are markets that will only get bigger in the future as well. The digital ad market is projected to grow to over $500 billion in a few years, while online shopping should grow to almost $5 trillion in a couple years as well. And Amazon will be by far the leader in that that market. And that's still with online shopping only making up less than 20% of retail. So if Amazon wants to invest more money now to ensure higher traffic volume in the future that they can not only sell products to, but also advertise to at higher margins, then I say go for it. All the meanwhile, Amazon is the only big company out there that is actually gaining market share in online advertising, as they're expected to grow from 6.8% to as much as 8.8% this year. That's a lot lower than Google and Facebook, but Google is actually expected to drop this year, while Facebook is barely expected to climb by just 0.3 percentage points, which is far less than the growth that Amazon is seeing. And that's because as more sellers try to push their products on Amazon.com, they have to pay to advertise on the site to ensure that their products actually get seen. And Amazon has even been placing ads lately that don't even have anything to do with the platform. I was watching an interview on CNBC today, and one analyst mentioned that he saw ads for a Jeep, which you obviously wouldn't be buying a Jeep on Amazon. So it's clear that more and more companies are starting to see the huge benefit of advertising on the platform, even if they don't actually sell their products there. And all of this is leading to huge sales that are expected to continue growing to nearly $300 billion this year and still grow at rates of almost 20% a year. Now, there's no question that this stock is extremely expensive with a forward PE ratio of around 48 even after the drop, but this isn't a value stock. It's an incredibly giant company that is still growing at very high rates. And just to put some context behind this, if you factor in expected earnings growth for the next 5 years, their PEG ratio is actually lower than Apple, Microsoft, and Google, and it even ties with Facebook at 1.34. To be fair, if the high investing continues, then those earnings would probably take a hit, but that's obviously why the stock sold off. And I still think that Amazon is probably trading at a fair price right now when looking at the long-term picture, and that's one of a cash generating machine, as free cash flow for the past year was up over 50% year over year. To be honest, Amazon reminds me of Warren Buffett's famous quote that it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. And while value investors would almost certainly argue that Amazon is incredibly overvalued, it's interesting to note that even Warren Buffett's own Berkshire Hathaway bought some of the stock in the first quarter and then again in the second quarter, although the decision wasn't actually Warren's, but it was still of his company's. Still, my opinion is that the price is fairly valued at this time. Now, will it sink lower? It absolutely can. And if we ever get that recession that everyone keeps screaming about, then this stock will get absolutely hammered. Amazon is heavily exposed to the macroeconomy, so they will absolutely take a huge hit if we ever get that recession. So if you're like a short-term trader, or you're worried about these type of things, or you're more of a value investor, I can completely see your point of view where you would want to stay very far away from Amazon. But as a long-term, more kind of growth-oriented investor, I'm able to see past that because I do have a long-term horizon. But as my second largest stock, I probably shouldn't be adding too much more to my position. So I'll be adding slowly using fractional shares over time and hoping that it continues to drop so that I can buy a little more. But if it starts to just kind of recover and take off again, I'm not going to be buying because I already have a big enough position. I don't really need any more. Anyway, that's just my opinion. Don't try to copy me, guys. Make your own decisions based on your own research. I know that's a given. I know most of you know that, but I still have to say it because some people just insist on copying other people's portfolios. That's a really dumb thing to do. Please don't do that. Please make your own decisions. I'm just sharing my opinion on Amazon. Anyway, I hope you guys enjoyed the video. If you did, make sure you hit the like button. Thank you for all the support. I'll catch you guys in the next one. Take care. Bye-bye.